So the SEC had a strong month in January. It was a little bit behind the index, which recovered very strongly from the back end of last year's sell-off. So in the final quarter of last year, the small cap market sold off aggressively in sympathy with global funds, global markets. We had a good bounce back in January. We had a couple of takeover activities that really boosted the performance of the company. We had Helios receive a bid from Jangho Group in early January, which was rebuffed by the company, but it's starting to show there's people out there looking at the sum of the parts and finding valuation support for the company. And we had an increase in the offer for Navitas, which saw a revised bid by the BGH consortium. So it seems likely we're heading into a more challenged reporting season. We've got many of the cyclical sides of the economy looking to slow down, so anything related to the housing cycle, so building materials, other housing related stocks and finance companies, retailers, and also media stocks have all come under pressure in the final quarter of last year. Some of those sectors, if you look forward, are starting to look more attractive on a valuation basis. And potentially, if they offer good opportunities during the reporting season, we'll look to be adding to those sectors for the company. Some of the risks we're seeing in the small companies market are the really strong momentum we're seeing in some of the more expensive technology style names. We apply very strict disciplines to our valuation for stocks to enter into the company and the funds we run. And so if we can't stack stocks up on a fundamental basis, we don't buy those for the company. And we think over the next 2 or 3 years, we'll see some of those highly rated stocks derate. And there's a real risk that people get caught in those names if they don't do the bottom-up work. For more news and insights, please visit www.spheria.com.au, and thank you for your time watching the Insight today.